This is Justin Pulitzer. This is my weekend review video for Sunday, January 29th, 2017. It is, however, being recorded on the Saturday the 28th. Good amount to cover. I think I may have put together a little bit of an ambitious roster here, but let's just jump right into it. You can see that volatility is getting very close to really below the low of the range, and I would say probably at this point is starting to favor a bit of a pop-up, meaning there could be a bit of a pullback in stocks. However, I don't want to discount the fact that we could see a sub-10 print that has happened in the past. And actually in 2007, that kind of marked the top of the market. That said, volatility has been very low. I don't necessarily know that that is going to change. You can see we've gone through very extended periods of low volatility with a couple of minor blips. I think a throwback maybe to the 200 might make sense. I mean, that would really only be about 14. It's also possible that you have a continued rise in the market with the VIX rising. That's usually something to be a little bit concerned about, but it isn't necessarily unprecedented. It can happen from call buying. That being said, we are in pure directional mode play, meaning buying put spreads, buying call spreads. We want to be net long of premium as opposed to net short of premium, which sort of starts getting interesting when we start getting into some elevated volatility reads. A couple of things I am seeing that I do think will be positive for the market is, let me take a look at the UUP quickly. We're seeing a pullback, a quite dramatic one in the dollar, and a couple of things. We have a 2-day range here in the UUP. I think above the 2-day range high, we probably could see a rally higher. Below the 2-day range, I think this would probably continue lower. You can see that this is basically a check back to the accumulation channel, and I am expecting a bit of a rally in the dollar. A couple of things I'm seeing with regard to the dollar that could be a little encouraging is that it looks like it might be topping. We could actually have a head and shoulders pattern in the works. I discussed this in the last weekend review video, and it seems like that could be the case. We are into basically the neckline here. It's also possible we go a little lower and then have a lower right shoulder, which to me would be still more bearish for the dollar, meaning like we continue down to, let's say, the 100 MA or get this gap fill, then it rallies to a lower high and then comes in. We'll have to see how that plays out, but I am expecting a bit of a bounce in the dollar. I think you can see that very well in the dollar futures as well. Let me zoom in. I'm getting a little bit better at this. This is our neckline, so there is room for still maybe even a tad lower, like a spike move, and that would coincide here with the 100 MA, which was kind of the support the last time, but I am expecting a bit of a bounce in the dollar. Maybe we do get a look again at those 102s, and we'll see how that plays out. If this were to fail the head and shoulders pattern, like we get above the 103s, then I think the dollar is really going to be off to the races, and we could be looking at those 109s, which I had talked about. If you kind of double up that range, you get to that area. So that's a couple of things I'm watching in the dollar. Head and shoulders patterns are very powerful. Failed head and shoulder patterns, though, however, are sometimes even equally as powerful. The bonds. So I'm seeing a couple of things in here. Remember, we had gotten long here. We talked about adding over the high of day of the Fed day and then getting out near the 2009 crash peak. I talked about a stop below 123. This has come down quite a bit. You've had now 2 days below the Fed day range, and this one was a hammer, and you're now back above it. So this could constitute a look below and fail. So the 50 MA here is going to be very key. I think if we start getting back up above the 50, we now would have a higher low in with regard to the bonds, and there could be a bond rally, maybe even to retest the gap. We'll have to see. That would be really interesting because you'd be making a higher high off of a higher low, and maybe that means yields are going to start falling again. I don't want to be too premature with that type of speculation, but we are still in a bit of a downtrend. I'd like to, I believe, a move over these 2-day highs. The high here was 119.60, I believe, is a right or right out long with a stop below the 119.21. If you start getting back below there again, then I think we are going to revisit the old low here and maybe even lower. We'll have to see, but that's my my play with regard to the TLT. The Fed day range, of course, being the most important of the levels. HYG not acting too shabby. We're re-challenging these old all-time highs. Remember I talked about the inverse head and shoulders? We are basically re-challenging these highs after a very nice consolidation period. So even if interest rates rise, I'm not seeing anything that would lead me to believe that we have a credit crisis on our hands. When you see something like this, you start getting a little bit more worried about recession. And this was really the collapse in oil. A lot of those companies bit off a lot of debt. I think for the most part, a lot of that risk has been hedged out at this point. So I won't really start getting too concerned about the high yield unless we really start breaking the 50 and 100 MA confluence. And you can see the 50 is just coming through the 100, which these are good signs, signs of health. The 20 MA has held here. I'll say this, as long as the 20 MA holds, I'm cool with being long. If there's a snap, there is a right or right out short trade for a bit of a pullback. So that's how I'm watching and playing the HYG. The oil, very choppy up here in this consolidation range. You had a bit of a look below and fail. It's now kind of holding. Anything above the 52.22, or let's just say 52, I think is sort of okay. 50 MA roughly, quickly approaching. So the 50 MA to me is going to be the big key here. But oil consolidating, and I don't really see that much to do with it until you get a range snap. I said I like this day's range as a key. Now we looked below and fell. Maybe we get a look above and fail, or a look above and go, but it seems to me that the 52.11, which was this low, is a good gauge again, and above 55.24, I think that there could be range extension higher, given the fact that you when you do have a look below in range and fail, it tends to rotate to the other side of the range, and oil to me looks like it is firming. There's been some bullish and bearish news out about it. I've been thinking, though, that oil probably has seen, famous last words, has kind of seen the worst of what it's going to see, and it seems to me like it is trying to grind a little bit higher. You had a head and shoulders pattern here. Remember what I talked about? I failed head and shoulders. Those tend to be powerful with a move up, but we'll see how that plays out. But oil in general, it doesn't look too terrible to me. XLE, kind of the same situation here. Remember I talked about the consolidation funnel and the check back. So a couple of things to note about XLE. It's in a bit of a downtrend, and there was a fake kind of breakout, and now we're back in it. I don't know if that means that we come back down to retest these kind of range lows again, or if we're going to go higher. So this is a break of the 50 MA. We had one here, but it was quickly answered. So what I'm thinking here is that Friday's range is key. A move above the high of day, I think, is a long for a quick right or right out play. Below the low, though, I think could be a right or right out short, and maybe we do get a 100 MA test. I was looking at this a little bit more constructively here. Look, you have lower highs here, some lower lows, and then this was sort of the range breakdown day. So I'm a little iffy and cautious as long as we're below 75.46. If we can take out 75.46, I think we're going to come back up to the highs and maybe even make new highs. So I think you could safely buy stop XLE over 75.46 if you're looking for a long entry for a right or right out type of trade. Exxon is acting kind of not so fabulously. We are still kind of above trend, and I clicked here, and that's not good. We never got a full check back. We've kind of This was the Tillerson gap, and we consolidated, and now we're below. So this was a look, I guess I don't know if I would say a look above range that failed, but it kind of is. So maybe we're rotating back down to the lower end of the range, down in like these 82s, 83s. This area has been key multiple times. You have a trend here. They are reporting soon. So I'll say this. As long as Exxon, let's use this day's range as a gauge. Above 86.10, I like long. Below the low, 84.59, I think there could be a quick right or right out short play. I will say this. Look where we've come from. We've come really far, really fast. I think if there's a move to these lows or even a slight breakdown below these lows, people will be in freak the F out mode, and they won't realize that it's come so far so fast, and I would like to use that opportunity to sell out of the money puts. So I am really more looking for a long setup in Exxon, but I am mindful that we could see lower before higher, if that makes sense. And again, this day's range to me is the key. That date is 119. So the 119 range, I like above it, I like long. Below it, I like for a quick right or right out short. Chevron reported. They've been kind of the stud of the belle of the ball because of their earnings here on in October 10/28, and they've really outperformed Exxon. They have a bit of a lower high and now a break below the 50 MA. So we'll keep it simple. I often do this with, and look, a break below this range. So really simple. Above Friday's high, I like as a right or right out long. Below the low, I like as a short, maybe for a break even as far down as the 100 MA, and also this kind of, we have a trend and like a more of a steeper trend. I love that it coincides with the 100 MA and this kind of low here, this gap fill. So that's what I'm thinking. A breach of the low, we could see a move still lower. That would probably also mean a little bit more weakness following through in that XLE. Another commodity that I was playing long was coffee futures. It's kind of cool to say that you're speculating in coffee futures. Not really. I mean, whatever. I was looking for the 50% fib. I'll tell you, I had been originally looking for the 61.8, but I thought I was getting a little, I don't know, I guess greedy. I don't really want to say greedy, but maybe a little ambitious because of a couple of things. One was I bought it this day, and I had to sit through a little bit of pain, but not that much. I knew we had this reference low here, and I knew that, look, again, remember when, like I was talking about with Exxon, when something breaks down, when it's come down from the top this far, this fast, these breakdowns don't tend to really last long. They just tend to get out the last of the shit heels. Sorry, I hate to say, I was trying to think of a more politically correct or nice way to say it, but hey, that's one of the benefits of being kind of independent here. I can do things like that. So once we got above this range, it was clear to me we were going to come back up. The 38.2 had a bit of a stutter step. The 50 is having a bit of a stutter step. We're still inside. This was the day I got out. The next day we basically had double tops, right, at 15.54. I think I got out at 15.51 on the button. Not the most liquid of assets. You can see how this trades in a lot of gaps and is choppy, and we've come up really from the bottom to the 50. The real breakdown did take place at the 61.8, so I'll keep it real simple, stupid. Below 15.04, I like short. That's this big emotion day. Above the high of 15.54, I think we will see 16.05. So that's the play for Cafe. China, by the way, I forgot to put this in my weekend review of last week, but have no fear. We are going, when we say we, by the way, I really mean me. I will be covering it. We've been in a bit of a, we broke the uptrend. We're in a bit of a mild downtrend. BABA was okay this week. I'm going to discuss BABA in a minute. You have 2 days. You broke out of the trend. You're above the 10-day. I like that the 200 is still upward sloping and that the 20 is about to come through the 50. But you can see the 50 here was the hold. So I think a pullback to the 50-28 MA confluence could be a right or right out buy. If there's a pullback below the 2-day low, I think could be a quick short for a move there. Above the 100, though, I think could continue to rally, and maybe rally a lot, maybe even back to these old highs, which is would be 100% retracement kind of this down move. I think a lot of people would get hopped up there, but not realize that it's the backside of an old uptrend line, and it could be an opportunity to either sell or have a right or right out short. So the 2-day range to me is key. Above it, I like long again. Below it, I think there could be a quickie pullback short. And then into this region, there's a lot of moving average confluence. I'd probably either be looking for a long or a out of the maybe even an at the money or out of the money put sale. The BABA, moving right along, is acting a lot better than it had been. This is technically a professional gap. Look, multiple days of consolidation and a gap and hold multi-days above the trend line, so why didn't it just keep going, right? A lot of people were playing long, and it did come up quite a bit into some reference resistance. This day's range here is key. You really need to clear 104.10. This was the break, really, in my view, the more prominent breakdown. You did have a bit of a bounce, and subsequently, the 10-day was very difficult to stay over. If there is a pullback, though, I will say to the 10-day, look where it's riding. It's riding in line with a trend line. If that coincides with like this day's low, I would be an interested right or right out buyer. If not, this thing could fail and just fill the gap and, maybe even come back down into range. The 100 MA was a lot of resistance. Maybe it is the new support. So if you're interested in being a BABA long, you might want to sell some puts that are maybe at or below the 100 MA. I think that on a pullback could be interesting, or if you want to try right or right out shares, 100 MA. I would love if that coincided with a trend touch or a gap. It is basically coinciding with the gap fill, and I think a lot of people would have been playing long, probably got stopped out and didn't realize that the 100 MA is as key. So I think BABA looks like it wants higher, but I don't know that we aren't going to get a little bit of a shake and bake first. How will we know if BABA is going to go higher? The gap day range to me is always key, 103.19. I think above there, or if you want to be more conservative, you could wait until you get clear 104.10. The high of this day here was 104.27, 104.57. 104s are clearly a very important level, so maybe you want to wait for the clearance of 104s and then play for a continuation higher. Yeah, the channel high is up around 114, so that could be a nice 10-point runner. So yeah, that's my thoughts on the BABA. IBB. The biotechs and the pharmaceutical stocks are sort of acting almost like the new banks. Very choppy and awful, right? Meanwhile, this was a look below and fail, below range, and we're above that high. If you want to try IBB, anything above 272, I think is okay. Could see a move back higher. If you start getting back into that range, though, I'd either want to be flat, or if you want to try a right or right out short, be my guest. The 200, look here, this is really the problem I think IBB has, is it has all these people who have been, I don't know, just whipped around. You're below a lot of major moving averages here. You have the 20, the 50, the 200, the 100. I mean, these are hard averages. The 100 here was sort of the I don't even want to say look at this. The 50 and the 100 really seem to be the big ones. So if you can start clearing these, maybe you get a chance. But I'm cool with it, like I said, over 272. Back below, I'm not as cool. And look where these breakout numbers were. So that level is quite significant to my eye. Bristol, the Myers. We are into primary trend. This has come down quite a lot. Their reference lows here. I'm cool with right or right out long. One more thing. This is a big 50% move of the entire move, and it's down into trend. This move up, though, did take out a lot of this sort of, I don't know, oversoldness, but this is a lot fast. This is, not an awful company. So, how to trade the Bristol Myers. There's some good news and bad news. If this were to fail, we could even see 39. The next fib, the big 61.8 is 39.35. So I don't know necessarily if that's going to happen, though. So I'll say this. If you want to try it, I'm fine long with a stop below 46. If you're already long, if you took this trade that I had discussed, you want to add over the high of day that day. This, to me, would be a look below or a break below and fail. And any like a kind of a capitulation, you could already see the volume is starting to kind of dry up on the down moves, which I think is significant. Above that high of day of 49.51, so 49.52, I think you could buy stop it, and I'd be looking for a move. I don't know if we get the full gap fill, but we might. But at least I think back to 53, maybe even the declining 10-day. But I think that gap will eventually fill. I just don't know when. This has come down, like I said, a lot. And I like it, like I said, long versus a 46 stop with an add over 52. If you get below 46, I don't know if I necessarily want to be short, but I probably wouldn't want to be long either. So let's get into the SPY. How are we doing on time? Come on. SPY. This is the S&P ETF that I use. Why? A lot of retail traders trade it. I like to trade it myself, actually. Did I zoom in too much? No, I think we're... Did I move too much? More than enough. Let's see. No, this is okay. So there's a few things to be... There's a couple of big things to take note of. One is that we had a breakout, right? We spent 3 days above the consolidation range high. That's significant in and to itself. There are a couple of things, though, that have me a little bit cautious. One is that we did come up from the bottom. However, we spent multiple days consolidating. The 20 MA and the 10-day, MA are really not that extended from price. The 50 is coming up very nicely, getting close to the 225, which is really the true door, in my view, to the health of this market. But so how to trade this? One, first and foremost, this day, particularly in the ES, let me show you the Fed day high. This move up here should not have fooled anybody. This was the first day, even though we kind of pulled back into the close, which is fine, just people who were, you had a big squeeze, you had a lot of people who I guess booked some profits. It was the first day ever that we closed above the 1214 Fed day high. And it was met with a gap and kind of go. So there's some good news and there is some bad news. The bad news, first and foremost, is that the good news. The good news is that we made a new high that is higher than that in a overnight session. The only recent memory that I have of an overnight session being a good high before a complete kind of collapse was the killing of Osama bin Laden. The market made a very large move up and then never met that high, and it was really, frankly, a disaster. I think there was like an 18% correction after that. So the probability favors higher that this won't be the all-time high. That this pullback is just a mild consolidation. If you look at the ticks the last few days. This day was basically a complete split. I guess the bodies had a little bit more of a pronounced move lower here, so a little bit more distribution than accumulation. But look with how the market is pulling back. The NASDAQ breadth was still positive. The NYSE was like barely negative. AD lines were a joke. These aren't really super negative AD lines. And the VIX never really got going, right? I mean, it closed kind of weak. So what are the likely scenarios that I see? One is that we had a bit of a 45-degree line, meaning we had a bit of a rally into the close, meaning poor lows. Poor lows often are repaired, but sometimes they reject, and there's a move higher first. So that seems possible to me for Sunday night, Monday. However, I'm not ruling out that we fill this gap and have a retest of the breakout first. The true retest would be to the 2272 half. Now, I teased up the in the weekend, leading into the weekend video, that I saw there being three likely scenarios. One, and I think I'm going to go back to the S&P to show how this would play out. I'm sorry, in SPY to show how this would play out. One would be we just continue to chop sideways, don't fill the gap, and then take out this high. And in that case, I think you could buy stop over the 229.71 for a move still higher. How much higher? Maybe the channel high up here. I think you could even potentially double the range here. I do that a lot. Remember I talked about that with the dollar. Could double the range, and that would really get you up to the big 1.618 Fibonacci extension. Remember I talked about this being the little one, and it makes sense that we consolidated, but the big one is up around 234.03. If you 2 times that range, that's basically 233.95. So it's really a move to the 234. Could it just grind and be really frustrating for shorts? Absolutely. So that's one scenario. The other scenario I see is that we do have the check back first to the breakout level. And where would the check back, an acceptable check back, be to me? Either the old all-time high here at 228.34. I'm willing to give it a little wiggle room to this consolidation range high, 227.75. The 10-day and the 20-day are kind of coming up there. And we kind of check back and then go. That's a third scenario. A second scenario. And then the third scenario would be this, is that this is all a look above range and fail, and that we come back into range and it doesn't stop, and we do get a full move to the lower end of the range. Either if you use this range, it could be to the 50 MA, or if we get a more severe break, it could be even as far back down as to the 222s, or maybe even the channel low, which could, I don't know where that would be at the time, but could coincide with the breakout here around the 220. I think, though, that a move from this high would likely stop here. And you also have the 50 MA. That was really, look where when you had this gap down, the 50 MA was the really staunch resistance. We haven't retested it in a long time, and I find it really hard to believe that there's not going to be some interested buyers at that level. If the 50 were to fail, though, the 100 would be in play. And look where that is, right where the true breakout of the market was. It would basically take back this extension here. So that's sort of my thinking. So I don't like to assume end ranges. I know a lot of people get really excited and they're like, oh my God, I think we're going here, and then they load up on like weekly calls or like monthly, and that they don't realize that price moves sort of level to level, and I always think about it level to level. First, like I said, let's just assume for a moment the move is down. We would get back into these levels. Then I would reassess. If I were playing short, like below this day's low, 228.51, I'd probably be I don't necessarily know if I want to play that. I really want to see how this handles itself. So I would see, do we get a violent move up? If so, I'd be playing long. Do we just kind of meander here? If so, I might be looking to play short. Do we now take out these 3-day high? Then I'm looking to be playing, playing long. A very common possibility is that you do get that gap up. There's a couple of days of consolidation, stutter step, and a move higher. That's been really very asymptomatic of this market. Look here, you had these consolidations, sort of the false breakdown, the move up again, and then just chop for a while. Look here, the kind of the move down, up here again, chop, another stair step. So I just don't see this market really running away in either direction. I mean, I could be wrong. We could get the blow-off move, or we could get a more violent pullback. But like I said, I like to take it level by level, and that is how I'll be trading it. You did have this isn't meaningful excess, but you kind of have a high bookended by two lower highs. If you get below Friday's low, I guess you could try it for right or right out short for a check back, maybe even this gap fill. And then reassess. If it holds and the market bounces, I think you'd probably be looking to add on longs. If it fails, then we're looking for a move or an articulation as a failed breakout to a move back to the lower end of the range of the 50 MA. Then we would reassess. We'd probably be looking to cover here and maybe even go long. If this fails, then we would be looking for the short down to the 100 MA. Like I said, thinking in stages. The expected move this week is $2.33. That would be a move up to $231.30 or a move down to $226.64. Like I said, we are in a very low IV range. If the move, I use that number when the IV is low as sort of an upside cap. When it's to the downside, I don't use it as a solid number because the IV picks up and there is a lot more move to the lower end of the range. Like I said, I think the 50 MA is sort of like the kind of the max risk at the moment. IWM. So, what's going on here? IWM is sort of giving a lot of mixed signals here. This was a false breakout day. We got to move back down to the lower end of the range. The 50 MA held. Very key. IWM now had this gap up. It was a lower high, and it already filled the gap. So that has me thinking maybe SPY does want to fill the gap. However, we have a 50 MA and a 20 and a 10-day moving average confluence. You've had multiple looks below this range here. As long as we're above the 134.81, I'm sort of okay long. The 134.76 is the 50 MA. So I'm cool with this until the 50 MA breaks. If the 50 MA breaks, we could have a retest to fill this gap. We'll have to see how that plays. So Friday's range to me is the key. Below it, I think you could do a quick right or right out short, maybe for a quickie to the 50 MA. Above the high, this would to me would be a false break, kind of a false break back into channel, and we would articulate higher. So Friday's range to me is the key. The expected move this week is $2.14, so 138.33, or a move down to 136.05. Again, I use the upside as sort of the cap. I'm getting a little more concerned about Qs here for a couple of reasons. One, you have dojis at the top of a range. We got the 1.618 fib extension, and we are at a channel high. And you've had a couple of very prominent stocks not able to go higher on what are considered, I would think, pretty good earnings, like Google, for example. So, what does that mean? Does that mean we're going to fall apart? Maybe. Maybe not. So I'll say this. We have a 2-day range. If you want to be I don't know, if you're looking to play short, I think you could use the 2-day low as an entry for a gap fill. That would coincide probably with a trend touch in the 10-day MA. If we get above this high, I mean, I don't necessarily know if you want to keep chasing, but there could be a extension quite higher. I like to think in stages again. If this does come down, I'm thinking a test of the 10-day and the gap fill. If that fails, then I'm thinking a move down to the lower end of this channel. We did spend some time here. It chopped for a while and then got the move. So I like that 2-day range as a entry for a right or right out short. Speaking of the aforementioned Google, let's first talk about, let's just do Google. I'll break up the order a little bit. Let me zoom in. I'm getting a little bit better at this. This was the last time Google reported. Very similar looking candle. The next day you had a very slight bounce to the 10-day, and then it collapsed. So is that going to happen again? Let me show you a couple of things why I think that trade may repeat, and I'll make the argument why it may not repeat. The first one is we got the this sort of upward resistance. Google actually was down after hours, couldn't stay higher, and then closed low, below almost 3 days worth of trade. However, we did hold the top of this bar. We are still above the 10-day here. Here you had a close below the 10-day on a reversal of earnings. So I will say this. We didn't get the channel high. I think the reason for that was that I did a poll and like 76% of people thought Google were going higher. I hate when I see stuff like that. I like to see it more balanced, or even like when people think it's going to go lower. It sort of like reminds me of this movie Hot to Trot, if you're interested in seeing kind of do the opposite, or more currently the George Costanza do the opposite. So I think that's why Google didn't go higher. I think it was just a lot of people. It had already come up from the bottom. You got a move down, and now it came up from the bottom. It came up from the bottom, and I think there was just some profit taking. So I'll say this. Let's use Friday's range and the 10-day MA as the gauge. Anything below that low, I'm cool with a quick short if you want to play for a move down to the 20, which is basically down to this breakout in the trend. Above the high, I think that this stock will go higher, maybe to 895 and maybe even the channel high. So Friday's range and the 10-day are really key. Below, I like short. Above, I like long. Microsoft, I want to show you something that is quite incredible. This has come up a really, really long way, and this is now a gap above a potential channel high. I don't know how much stock I put into this channel because this is really the first test of it, but let me show you something. This was the 2099, the 1999. This was the dot-com bubble, right? We've come up a long way. You had a couple of stutter steps through it, and now you're firmly through it. I've drawn a couple of other. This was the big channel. I just used this, and I guess we're kind of through it here. More currently, I've drawn in these channels. This one, which kind of was working for a while, but now we're through it, and now a tertiary channel that we are coming quickly to the top of. So let me get back into more current times. So what does that mean? It means Microsoft may have a little bit more to go, but maybe not a lot more to go. So let's unpack how to trade Microsoft. I always like to ask myself, do I have good trade location? This is technically a gap and breakout of range, so it's possible it goes higher. It's consolidated a lot. I just don't know how much higher. I think that this channel high could be in play. I'd probably be looking for some kind of maybe a right or right out short there. If there is a move Monday lower, below, like if there were, for example, a gap below, like if futures are down and there's a move below 64.89, which is Friday's low, this to me would be a island reversal, and I think you could probably play it short for a move down to the 50 MA. So like I said, if we're gap below the low, or if there's a move below Friday's low, I like it for a quick right or right out short. Above the high, I think you could either stick long, or maybe if you want to try a right or right out long for a move for a couple of points higher. I probably am not looking to chase this. I'd be more looking to book profits. But that's my thoughts on the on Microsoft. They are executing really well. It's a really well-run business, by the way. Apple. So Apple is going to be reporting soon. They are reporting on 1/31. So that is going to be very early next week. That is actually on Tuesday. Remember what I showed you with the NASDAQ coming up into the channel resistance? That is getting me a little bit nervous about Apple reporting. But I will say this. They have tried so hard to take Apple down. Tons of analysts have come out with downgrades, and there's always a lot of shenanigans that go into Apple, but Apple has acted really well. My one beef is that it's come up a long way. It broke out. This is sort of a failed head and shoulders, though. So anything above 118 quarter, to me, and look, we've spent a lot of time here, this should go higher. This could and should go higher. Would I be chasing Apple first entering here for the long? Again, I have to ask myself, do I have good trade location? My answer is maybe not as much. What I would prefer to see with Apple is the old shake and bake. For those who are unfamiliar and unaccustomed with the shake and bake, this is the shake and bake. You ran up ahead of earnings, you had a multi-day pullback, kind of a freak out, and then it was a gap and go that you could have played for several points. So maybe we get that again. I would love to see Monday and maybe even Tuesday down with a little bit of a freak out, maybe some downgrade, some fear. Who knows? Skyworks was really good, and I think that's why Apple has held strong. If this were to move, you could see 125. The IV in this is not super high. So I think you could probably play it with either call spreads or put spread, whichever way you want to play it. You're probably going to get a decent move. I'll let you know what I'm thinking ahead of the number, likely on Twitter, but there are some reference highs into here, so any gaps up could be an opportunity to maybe book some profits. 127s would be the 1.618 Fibonacci extension of this move up, so and a channel near a channel high. So it seems to me that Apple could have some room to run. I want to do a survey on that. Maybe I'll do a Twitter survey, and then maybe we'll do the opposite of that. My guess, though, is it's going to come back bullish. So I'm sort of a little undecided on Apple, but I'm thinking that it does look like it could continue to run higher. It's doing a lot of things right technically. Amazon, yeah, so we talked about this being a long above the 50 to the gap fill. I talked about, to the gap, a pullback, to the gap, a pullback. Now we're back to the old all-time highs. They seem like this stock, it's again overbought here. Do you have great trade location? You're at a channel high. You're at a reference high. I can't say that I don't think that this is going to go higher, because I actually do, but I don't know that we're not going to see the pullback first. And again, I have to ask myself, do I have really great trade location? Would this be a gap and go? Would it be a gap and hold? I think the better trade, if you haven't been into it, first of all, if you're in it, you're still in it. I like the idea of booking profits here and hedging, either buying put spreads or selling upside calls to fund put spreads. I prefer to trade it, like I said, after the print. If there's some kind of a big pullback the next couple of days, again, a shake and bake, then I would be more interested in playing it long. But coming into old all-time highs, a channel high, I'd probably be looking to, at the very least, book some profits and at the very least, book profits and probably hedge. I don't necessarily know that it's a short, although it could be, but I'm either looking to play this long on a move above the range, potentially, like if it were to gap and hold for a couple days, or more likely on the channel low, to me would be interesting. If this were to be a failure, though, you're going to have a lot of people talking about this being a double top, and there could be some more significant pullback in Amazon. Probably more interested in the shake and bake setup or waiting till after the print to play it. Again, we'll do a survey on that. Facebook. So, we talked about this, didn't we? When I say we, I always mean me, by the way, when we say we. So I said that we could continue up to the old all-time high, the backside of the old trend. Everyone I thought would be getting very excited about this. We have an old high. We came up from the bottom, stalling at the backside of the old trend, and you now have a kind of a look below and fail of that day. So what am I thinking? They report on the 1st. Again, another one I'd rather trade post-print. This could be one of those double top things. I really want to hear what they have to say. This is a specific case. This came down, and what got me soured on this was that they lowered their growth outlook. And when growth starts getting lowered, I start getting nervous. So I really want to hear what they have to say. If this is a gap, if it goes up, it could be an opportunity potentially to sell because it's come so far so fast, but then I would be thinking 145s are potentially in play. That's the 1.618 Fibonacci extension of this. It's the progression line. For those of you who followed me for a long time, you know what that's about. And I do think that that would be in play. A move below the 2-day low, I think, could be a quick pullback. I would like to see this actually come back a little bit ahead of the number. We'll see how that plays out, but again, this might be one of the ones you want to trade. I have to ask myself, do I have good trade location? Did you buy it down here? Do you have good trade location? Absolutely. If you buy it up here, you're near a reference high and the backside of an old trend line. So I don't mind playing like put spreads or put ratios if you want to play for a pullback, but I am not as hopped up on it as I might have been in the past. I do want to see how that behaves post-print. Netflix, behaving the best of all the FANG stocks. Still consolidating inside of this gap range. You had a bit of a look into the gap that failed. I think you could buy stop at over 143.46, and that probably would take you up to the 151s, which would be the channel high. Below this low, then, if this multi-day consolidation, it's probably a short for a pullback to the 50 MA. Keep it real simple, stupid. Tesla also has earnings coming up. Again, I have to ask myself, do you have really good trade location? You had a bit of a breakout here of the range, and now it's kind of listing back a bit. What I'd like to see is this to pull back into the earnings and then set up for a long. I do think that 265 has been a big level for a while. We've come up all the way from the bottom, so it might be a little bit of an issue. If this does continue on into the earnings, it could be a bit of a sell the news event. That said, I do think that Tesla is doing okay. As long as the trend holds, I think you could kind of buy the dip. But again, it's come up a lot. I'm always suspicious of these breakouts when they've come right from the low to the high without really much pullback. So again, I hate to say it. Do I have good trade location here? Not particularly. Would I be more interested if it came back down and tested the trend? Yeah, probably. But if this just keeps going ahead of the print, it could be another one of these sell the news kind of events. NVIDIA, however, this is starting to look a little bit interesting. Intel had good numbers. NVIDIA has pulled back. Again, I don't love that it's had a multi-day run, but this to me looks like the old high could be challenged again. This was down on Andrew Left, who's a prominent short seller, just saying that he thought it had run too far too fast. That's not really how stocks top, but it definitely has gotten a lot of the junk out of it. NVIDIA to me looks like it probably is going to trade higher. If there are any pullbacks to the 50 MA, I am a definite right or right out buyer on that, by the way. Someone asked me to discuss price line. Again, I have to ask myself, do we, after a big run, multi-day, this, by the way, was just the breakout, do we have good trade location coming into earnings? I think that this could want to go a lot higher, actually. Let's see how this handles this range high. Look, we came from the range low. We're now coming up to the range high. I like the idea of booking profits here. If this were to continue going, it's possible, but I would probably be looking to maybe book some profits into the, just considering we consolidated. If this does break out and it kind of holds, then you could kind of double up that range. It was 1,600 basically down to 1,460, so just double that up and put the projection higher. Could be up to the channel high. Price line, like I said, I think looks kind of bullish. I would be a buyer on pullbacks, but I don't necessarily know if I want to first chase it into reference highs. I'd love to see it consolidate a little bit. On 2.9, first of all, price line doesn't report till 2.16, but is going to move a lot on 2.9 because Expedia reports. So this also to me looks like it's got some room maybe, right, in the triangle higher. Multi-day consolidation and is kind of just breaking out. So if you want to play a price line and you don't want to be involved in such an expensive stock, maybe Expedia would be the way to do it with a sub 50 MA stop. So that's my thinking. Priceline, by the way, these two stocks, by the way, tend to trade together. And what happens is if Expedia is down, Priceline will be down, but then on their actually earnings will probably be up. If Expedia is up and Priceline is up, on actual Priceline earnings, it'll probably be down. So you kind of want to do, I think, the opposite on the earnings of Priceline as to what Expedia does. We'll see how that plays out. JPM did what we said, pull back to the 50, coming back up. This is probably going to make all-time highs. At some point, I do think that this is going to see 99, 100. So yeah, that looking kind of good in JPM. Goldman, also kind of very similar situation, held the 50, not quite as strong, but if you can get above Thursday's high, I think we will revisit the old high. If you get below Friday's low, maybe it pulls back to the 50 MA again. If Goldman, by the way, starts losing this low here, these like 230s, remember what I said, we get a check to the backside of the old uptrend line? We never quite got that, so I would think that would be in play, and maybe it even wants to fill the gap at that point. You'd have made a lower high and a lower low. I would be looking then to short bounces. So that's my thinking on Goldman. Morgan Stanley, very similar type of chart pattern. You have now two look aboves and fails. I would think that a third time would be a charm. Again, as long as it holds the 50 MA, I'm cool with long. Below it, to me, gets a little bit more iffy. FFIV, we're now into kind of the requests. Someone asked me about FFIV. On a longer-term chart, you have a kind of a uptrend. It's really just a big range. You came up from the low, kind of a lower part of the range to the high. It was a bit of a look above and fail. So does that mean we automatically rotate to the lower end of the range? Not necessarily, but it is possible. A couple of things that disturb me about this chart are this. One is that, and I'm a little too zoomed in, this to me is looking like a bit of a rounded top. You had a gap down that broke the range, and you're basically on the 100 MA. Where it broke out from was the 100 MA. So this is the must hold. You also sort of have a channel low. Once I see patterns like this where you sort of have like this like poke up that fail, they usually tend to resolve lower. Maybe the trend is in play. Maybe even this gap fill to the 119s. Maybe if this is going to get really bearish, there's a head and shoulders pattern where there's a move down to the neckline. I can't tell you. I'm just giving you possible scenarios. All I know is probability. And I'll say this. If you lose this day's low, the 132.58, it's probably a short to the 200 MA, or to the trend at least. If they coincide, that would be right where the beginning of the gap is, right where this sort of old reference high is, and I think that that would be a interesting play. If this does get above this high, there could be a rally. Maybe it tries to fill to the bottom side of the gap. So if you're aggressive, you could use Friday's low as your play. If you want to be a little more conservative, you could use Thursday's low. If you get above Friday's high, maybe there is the play for the fill into the gap. So this 2-day range to me is really the key, as is the 100 MA. The 100 must hold. If the 100 fails, it might not be pretty. Coles, what a dog. I had sold some puts on this move down. I didn't love how this was acting. This day's range to me is really the key. You had a bit of a look, but what was the low here? The low was 39. The close on Friday was 39. So 39 is the key. You have a gap fill here around 38.04. It's just come down quite a bit. This could be where it holds. If not, this could see 35s. I think that there's a lot of OI in the 35 puts, so this could be a bit of a magnet. But any move further lower into this area, just given where we've come from, I'd probably be interested in maybe taking it long at this point on any further move lower. If there was a move above Friday's high of day, which is 40.52, this to me would have been a look below and fail, another one, and that this probably would come back up to at least 43s and maybe further. Remember what I said here with the kind of look up before the move down? They tend to favor moves down. That's like an FFIV, why I thought that would go lower. So yeah, Kohl's is not behaving well. All of retail is not behaving well. They're just kind of getting, and the Friday they all got their snot kicked out of them. It really was not a pretty sight at all in across retail. So yeah, I think it could potentially below 39. I think could be vulnerable. It's gotten close to the 38.04. I don't necessarily. There might be some kind of a minor bounce, but it's not as dramatic as it would have been if it would have came down the first time. We've now spent a lot of time there, so 35s could be in play. At 35, I'd probably start dipping the toe long or back, like I said, back up above Friday's high. I just don't know that this is going to be a long because, look, this was the primary trend. You had the look below and fails, and then just a lot of days below it, and now you're breaking again. It's this stuff to me looks like it wants lower. Same thing with the target. I mean, these stocks have not been looking pretty for a long time. Lower highs, starting to make some lower lows. You're right around one of the trend lines. Maybe this comes back down into the this area, the 60 level. At that point, I might be willing to sell like some out of the money 55 puts just because it's come down so far so fast, and it's basically a gap fill from where this breakout took place. I think this area, to me, this trend would be a little more interesting in target. You could see this is just like it broke below trend, a look above now again. If you were to get back up above 65.17, I think you could probably see a move to the top of the gap. But anything below these lows, this Friday low, I think is going to continue down a little bit further in target. Pier 1 is a retailer I'm interested in maybe buying some stock in or selling some puts. This gapped and is kind of falling apart. However, you have a gap fill and a 61.8 at $6. The 200 MA here was a lot of resistance. It would be, to me, if we could get that low somewhere between 15.70 and $6. Ideally, this would be here. Like, you may get some kind of a bounce first and then it come down, but around $6, I'm starting to get a little interested in Pier 1. URA. Uranium, not one I trade or follow very often, but is looking kind of bullish. You can potentially double up the range up here to 21. Maybe it gets to 2160, which is the 38.2, and also where this breakdown took place. Do I have good trade location now after this thing has come up so far? The answer is probably not. If there is a check back to 1618, I think you could try it as a right or right out trade. More importantly, this was really the breakout here around 1433. The 50% fib is around 1514. I might put a buy order in around 1433. That to me would be an interesting area. That was a bit of a stutter step and where it really took off from. So I think URA is probably going higher, but I would rather buy dips than chase it at this point. That's my story. I'm sticking to it with the weekend review. I hope you enjoyed. If you liked it, hit the thumbs up. Please leave me comments. And we will be doing a ton of polls this week on a lot of earnings and probably playing the opposite of the polling. Let's have a great trading week, and cheers. If you're not following me, by the way, on Twitter, my handle is @JustinPulitzer.